Thanks for that excellent summary, Deep T, but I note that while Megabank can continue to meet its funding requirements, house prices will not decline significantly, capital will continue to be sufficient, and we need not worry about the state of the mortgage insurers.
Not quite, Mr. Chairman. Section 2 of my report analyzes the funding issues. Megabank's ability to continue to increase funding and expand credit to Australian borrowers is very fragile. You are in danger of becoming a zombie bank.
Deep T, Megabank has significantly reduced its funding risk by increasing domestic deposits, lengthening average debt term, and lowering our reliance on offshore funding. Not only that, but now that we can issue covered bonds, we've opened a new global source of long-term funds. Our sources of funding have never been stronger and more reliable. Megabank can grow and is far from a living dead bank.
Mr. Chairman, there are a few urban myths here. Firstly, whilst it's become popular to demonstrate that Australian domestic deposits have significantly increased over the last few years, an analysis of the figures tells a different tale. Without high credit growth, it's not really possible to increase domestic deposits in any meaningful way. Sure, the federal government has borrowed offshore and pumped those funds into the economy. This fund injection would increase deposits, but the large increase in deposits shown in the figures is due to two other factors. Megabank has simply redefined many wholesale borrowing products as deposits, a very simple but effective reporting ruse.
Go on.
Deposits also include offshore deposits, which grossly overstate actual reliable domestic deposits. In fact, if you include offshore deposits, some of which are certain to be part of an unstable carry trade, in the amount of funds borrowed by Megabank outside Australia, then those borrowings total 26%, not the 20% as generally reported. The majority of those funds come from the UK and the USA. Without those foreign lenders, Megabank will not be alive to any new Australian borrowers. It's all in the report, Mr. Chairman.
Deep T, reporting chicanery has been going on for decades. It's not mumbo-jumbo, it's just telling the shareholders and regulators what they want to hear in easy-to-understand terms. What's important is that our offshore lenders have supported Megabank hugely for the last 20 years, and it's in their and our interests to continue to do so. A Mexican standoff of sorts. If we stop borrowing or they stop lending, then your concerns may have merit. Deep T, we know that, they know that, so we'll keep on dancing. Simple but effective.
Quite. But have you been taking note of what's happening in Europe and the US? Does global leveraging ring any bells?
Of course, Deep T, we are not incompetent. That's why we heavily lobbied the government for the guarantee on our debt in 2008, a reserve bank liquidity facility, and recently for the ability to issue covered bonds. These measures have been hugely successful. Megabank's ability to continue to fund from Australian government-supported initiatives and issuing secured debt even with offshore turmoil cannot be put in question. While I agree that some of the risk factors pointed to exist, Megabank has every base covered to continue to maintain a strong balance sheet. Deep T, we should also not ignore the government's implied guarantee over all the liabilities of Megabank. We know it, the credit rating agencies know it, our lenders know it, the whole world knows it. Except the government, or at least if they are aware, they are not admitting it. Good thing too, if the government were to face up to the guarantee, we may have to pay for it.
Unfortunately, 2012 is not 2008, and the quality of government support, explicit or implied, in the eyes of global investors has changed considerably. But we'll leave an analysis of the federal government's finances to another day. More importantly, let's look at the much heralded savior in the form of covered bonds. My analysis shows that the way Megabank and the regulators have structured Australian covered bonds, these securities may turn into the most toxic bond instruments ever issued. Not for the covered bond investors, but for Megabank's unsecured lenders.
What's that you say, Deep T? What are you on about? When Megabank issues covered bonds, the regulations say that our capital requirements do not change. Therefore, the liabilities of Megabank have the same capital coverage before and after the issue of covered bonds. So where does the idea of toxic bonds come from?
When Megabank issues covered bonds, it transfers assets, residential mortgages, to a special purpose vehicle which uses those mortgages as collateral to issue covered bonds. As covered bonds need to be AAA, the credit rating agencies, not APRA, require an extra 20% of mortgages to be transferred from Megabank's balance sheet as over-collateral for the bonds. As Megabank only holds 2% of capital against all the mortgages in the cover pool, there is a massive differential of 18% of mortgages which are now not available as security for the bank's unsecured lenders. As Megabank increases its covered bond issuance, less and less capital is available to support the unsecured lenders. This is another potential downward spiral that keeps funding costs rising.
Hold up, Deep T. The over-collateralization in the covered bond special purpose vehicle is still good security supporting the unsecured lenders. It cannot just be dismissed as having no value to the unsecured lenders.
In times of low mortgage stress and for banks with higher capital ratios than Megabank, then I concede that the over-collateralization has significant value to the unsecured lenders. But as my report outlines, with Megabank's overqualified borrowers, Australia's housing overvaluation levels, stresses on the housing market and the very large need to maintain and increase offshore borrowings to keep the housing market afloat, then I believe that covered bonds represent a critical risk for Megabank's unsecured lenders and therefore Megabank.
Deep T, I'm still not prepared to accept your risk premise. Megabank has complied with all regulations and has received APRA's tick for all stress tests, which proves our strength. I'm going to get the head of APRA on the phone, Martin S. Pond. We came through the ranks together. Just a moment, Deep T. Hello, Martin. Rupert here. Just wanted to ask you a few questions. It won't take too long, Martin. Yes, I know you have a function to attend. Another great speech, I suspect. Strength of the Australian banking system. That's great, Martin. It is your forte. Strong regulator equals strong financial system, for sure. The board of Megabank has received a report from a Mr. Deep T on the strength of Megabank. Yes, I know it's a funny name, Martin, but I need to ask you a few questions. It won't take long. Mr. Deep T reports that the way we calculate risk-weighted assets and capital could be self-serving, decreasing capital requirements when times are good but massively increasing it in times of stress, which could cause Megabank great stress. Martin, APRA approves all these methodologies, so surely Mr. Deep T cannot be correct. Deep T also asserts that covered bonds jeopardize unsecured creditors. These assertions are preposterous, aren't they, Martin? So Martin, what you are saying is that APRA is only ensuring that Megabank complies with the regulation and guidance, but not whether our methodology has adverse consequences. You're saying that APRA regulation is based on international standards developed by the International Basel Committee. Do you think we can rely on those standards without question? Basel is in Europe, you say. That doesn't sound very comforting, Martin. Goodbye. Yes, see you at Polo. Mr. Deep T, I know exactly what to do. Take that report and shred it. You will be paid. I've been very entertained. Firstly, I'm off to Canberra. We've got to frighten the crap out of the treasurer. He's full of anti-bank rhetoric, but in the end he's a wood duck. We're gonna need to fire up that government guarantee very soon and at low cost.
I think you need to be a little smarter than that, Mr. Chairman. They'll have to make you pay big this time.
Yes, you are right. We'll lobby the government that it's all the fault of the mortgage insurers. It's them that are at fault and need the government bailout and guarantee. Next, we're off for a global boondoggle. Every investor on the planet has to know that we're a strong bank with total government support.
I give up.